Good afternoon, this is Tim Wegman with BIS Commodities, taking a look at the commodity markets for the week and kind of seeing where we are in December corn for the week. We closed 29 cents higher on the week. It was an inside trading week, or an inside trade for the week. November beans closed 11 cents higher up on the week, but we did make new weekly lows. December wheat closed 15 cents up on the week, also making new lows on the week, but we're able to close it out a little stronger. October cattle, we were able to close up $2.50 for the week. December hogs up $1.28 for the week. November crude looks as if it's going to be an inside trading week as well, probably closing close to $2 down on the week. We are seeing the stock market sell off today. The Dow is currently down about 200 points, maybe in sympathy with the 25-year anniversary of Black Monday. It was somewhat of a quiet, lethargic, low-volume week in the corn trade. Futures wasn't a lot of information out there to trade on. We did see that 79% of the corn is harvested according to the USDA as of Monday. Looking to up that percentage to 90% coming in next week. So we pretty much know what our supply is out there right now. I think in subsequent reports we're not going to see much of a change in our total supply. So demand, in my opinion, will be the key moving forward. We did see basis firm up worldwide. We did see Ukraine tighten up basis. European basis firming, and South American bids are starting to catch up a little bit. We are still the highest priced corn in the world. Here domestically, basis will be the key moving forward. If we are to test the highs, in my opinion, it's going to have to be led by the cash market. Keep an eye on basis in subsequent weeks. There was an announcement today that the Ukraine does plan on putting a ban on wheat exports starting the mid-November. So we did see a little support in the grain markets because of that, and that will provide some underlying fundamental support in weeks, months ahead. Technically, corn is stuck between a 730 and 775 trading range. We were unable to take out last week's 732 low, and we couldn't take out last week's 775 high. I think we are stuck in a $7 to $8 trading range for a while, and if we were to break that 730, 775 range, I think you would find some resistance at $8 on the top end, $7 on the bottom end. Soybeans were also kind of a low volume, lethargic trade this week as well. 71% of the beans are harvested according to the USDA. It seems as if the eastern corn belt is lagging. We do expect to see close to 80% as we come in here Monday. 71% of the USDA's export projections have been sold, and that's after last week's adjustment higher on the monthly supply and demand report. So we're still finding plenty of demand at this point, and that 71% is compared to a 5-year average of 49%. So we are seeing the tightness in the balance sheet still providing plenty of support as we move forward. And to propel the prices back to where we were, we're going to have to see an increase in demand, or we're going to have to see the fund money come back into the soy complex. And at this point, I think the key issues for them will be continued Chinese demand or South American weather. There is some concerns early on that northern Brazil is a little too dry, southern Brazil, Argentina is too wet at this point, but it is very early in the growing season down there as they are looking to plant as we ramp things up here. Technically, earlier in the week, we couldn't take out 1478, or the gap down to 1478 in the November contract. We were able to find some support, push it up to 1550 overnight. We seem to be finding some resistance up at that 1550, 1560 area. I think we're probably looking at pretty much more of the same as we roll into next week. We are expecting a cattle on feed report this afternoon with looking around 97.8% for cattle on feed and placements at 85%, marketing's at 90%. We'll see what those numbers are later on today. There was a light cash trade in the south this week at the 126 to 127 area. Boxes for the week were able to find plenty of strength. We were up over $3 combined on the week, and I think that led to the futures market being able to break out to the upside, topping 128 in the December contract. I think longer term we're stuck in that 120, 130 range. I would be looking to hedge anything close to that 129 and above. Hog futures continue their accelerated pace upward. We've only had 11 down days in December hog futures since September 10th. So we're seeing the cash and the cutout follow futures right up there, or vice versa. We are entering a little bit of an overbought territory. One thing to be concerned about, as I look at the deferred contracts, anything over $100, I think I would want to be trying to get some hedges in place out there, as June and July both have traded over $100 this week. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.